This is The Point, news from Noise, daily market call presented by Kattan Ferretti Financial. I'm your CEO, Brad Roth, and I look forward to having a daily discussion with you over the topics that we present in this note every single morning. So without further ado, The Point. All right, everybody, good morning and welcome to The Point. It is Friday, July 7th, and Cameron, why don't you start us off with the news?
U.S. stock futures are trading mixed, relatively unchanged, after yesterday's seemingly worldwide sell-off, resulting in nearly a 1% decline in the S&P 500. ADP employment data showed companies adding fewer workers to U.S. payrolls in June. However, a gauge of surprises from economic data this week staged its biggest rebound since March. Uncertainty around the U.S. government policy could be holding back economic growth, as it's portraying a negative impact on business investment. This morning, the U.S. Labor Department will report its official jobs figures, with expectations of 175,000 workers being added, along with strengthening wage growth consistent with a solid labor market. Crude oil realized a 3% drop yesterday, bringing the price to $44.38 per barrel, as a decline in U.S. supply isn't convincing investors that global markets are rebalancing. Thousands of protesters also gathered in Hamburg, setting fire to cars and disrupting the start of the G20 summit. European stocks saw a 0.4% decline as the STOXX 600 index is realizing its fifth straight week of decline. Comments from the European Central Bank clearly and understandably signaled that stimulus will be tapered. Policymakers considered removing a pledge to increase their bond buying program if needed, which risks the result of higher borrowing costs. German 10-year yields rose 1 basis point to 0.57% after seeing a 9 basis point gain yesterday, as some speculators see yields continuing their upward hike. The UK continues its struggles as industrial production and building output both fell in May, surprising economists who expected to see gains. The housing market is also showing signs of cooling as prices are rising at their slowest pace in 4 years. The yen dropped 0.4% as it heads towards its largest weekly fall since the end of April after the Bank of Japan stepped in to curb the rise in rates. And many indexes saw a decline as the Asia-Pacific, Japan, Australia, South Korea, and Hong Kong all realized losses of at least 0.3%, while the emerging market's sovereign dollar bonds posted their worst week since November. And Chinese bank giants lost $15 billion in a week after investors took home profits after a long rally in the Hong Kong market. The banks are said to be especially vulnerable to a correction after going ex-dividend recently. So, Brad, we saw a pretty big sell-off yesterday in markets.
Yeah, big word there would be tapering, the ugly T word that the stock market just does not like. Free money has been around for a very long time, and it looks like there is, we'll use a second T word, tightening in the United States as well as abroad. I think we're ready for it in the United States. I don't think we're ready for it abroad, and we saw a taper tantrum before here in the United States, and as that's starting to go on around the world and some of that tightening, I think we're going to see more of this. It's part of the game. Money has been loose for a very long time. So, yeah, I think the majority, if not all, of that move is just because the money's not free anymore. So, keeping an eye on obviously the ADP employment data. A little bit weaker than expected, but the big number today is U.S. payrolls in June. So, going to obviously keep an eye on that. That should move markets, but really. G20 summit, everybody's going to be watching there. I don't think there's a whole lot of market-moving events that are come out of it. However, you might see some things politically come out of there that might eventually lead to some things down the road, mainly on North Korea. But I don't know here, Cameron. It just looks like taper and tightening is what's going to be moving markets here over the next couple of months. But another slow week in sports. Anything you got for us in your your daily reviews on Freakonomics, or
pretty much nothing going on. One quick little sports thing on there was the proposed Pittsburgh Pirates Stadium, which never happened, so you might want to check that out. But Freakonomics, I thought it was interesting. They were talking about false alarms in like home burglary systems, and it said that the percentage of burglary alarms that go off that are false is between 94 and 99%, which is costing them about $2 billion. So I thought that was pretty funny, actually, a little interesting. So
I can't tell you how many times our little dog set off the false alarm at home, and the police have showed up. So
she's louder than the alarm.
That's true. I can relate. So Cameron, it's been a great week. We're going to keep an eye on the markets for everybody, and this ends the week of July 7th. We will see y'all next week.